Alright, buckle up crypto enthusiasts, because we're about to dive into the wild world of the next big thing in crypto. You know, that elusive unicorn everyone's chasing like it's the last slice of pizza at 3 a.m. But here's the kicker, that next big thing might just be a mirage in the desert of crypto dreams. I mean, remember when everyone thought BitConnect was going to be the new Bitcoin? Spoiler alert, it wasn't. Or how about one of a coin? That turned out to be about as real as my chances of dating a supermodel. Let's face it, folks, the crypto world is like a high school popularity contest, but instead of votes, we're dealing with cold, hard cash. And just like that one kid who peaked in high school, most of these hyped-up projects end up living in their parents' basement, wondering where it all went wrong. But why do we keep falling for it? It's simple. FOMO, baby. Fear of missing out is like that annoying friend who always convinces you to go out on a Tuesday night. Come on, it'll be fun, they say. Next thing you know, you're buying into some random token at 3 a.m., convinced it's your ticket to early retirement? Now, let's pull back the curtain on this whole hype machine, shall we? It's like a magician's act, but instead of pulling rabbits out of hats, they're pulling money out of your wallet. You've got influencers shilling projects like it's their job. Spoiler, it literally is. Venture capitalists creating artificial scarcity like they're manufacturing limited edition Beanie Babies, and project teams spinning narratives faster than a politician during election season. But here's the tea, most of these projects have about as much real-world utility as a chocolate teapot. They're all sizzle and no steak, promising the moon but delivering a handful of stale cheese puffs. So, what actually matters in this crypto circus? Let's break it down, shall we? First up, utility. If a project isn't solving a real problem, it's about as useful as a screen door on a submarine. We're talking actual adoption, not just a bunch of crypto bros trading tokens back and forth like it's hot potato. Next, tokenomics. No, that's not the study of how many tokens you can balance on your nose, though I'd watch that YouTube channel. It's all about supply, demand, and distribution. If the founders are hoarding more tokens than Smog hoards gold, that's a red flag bigger than the one at a bullfighting arena. And let's not forget about the team behind the project. You want developers who can code their way out of a paper bag, not just a bunch of marketing gurus who think blockchain is a fancy necklace. A strong community doesn't hurt either. You know, people who actually care about the project beyond its potential to make them overnight millionaires. Now, let's talk red flags. If a project promises returns faster than a cheetah on Red Bull, runs the white paper reads like it was written by a drunk toddler, maybe think twice. And for the love of all that is holy, if someone demiss you about a secret pre-sale, block them faster than you can say rug pull. But fear not, my crypto comrades. There are ways to protect yourself in this wild west of digital assets. First, DYOR. Do your own research. Yeah, it's not as fun as blindly following some guy with laser eyes on Twitter, but trust me, your future self will thank you. Use those block explorers like you're Sherlock Holmes on a case. Read white papers like they're the last book on earth. And for Pete's sake, check if the project's been audited. It's like making sure your parachute's been checked before jumping out of a plane. Kind of important. And here's a revolutionary idea. Maybe don't put all your eggs in one basket. I know, mind-blowing stuff. Diversify that portfolio like you're at a buffet. A little BTC here, some ETH there, maybe sprinkle in some alts for flavor. Just don't bet the farm on Moonlamp Rocket Coin, okay? Now, let's talk strategy. Forget about getting rich overnight, unless you've got a time machine or some seriously insider info, in which case, call me. Instead, think long-term. Be the tortoise, not the hare. Slow and steady wins the race, and all that jazz. Dollar cost averaging is your friend. It's like dating instead of going all in on the first date. You take your time, get to know the project, see if it's really worth your time and money. And patience. In crypto, it's not just a virtue, it's a superpower. Remember, the crypto market is more volatile than a teenager's mood swings. One day you're up, feeling like Wolf of Wall Street, the next you're down, contemplating a career in dog walking. But here's the secret. Zoom out. Look at the big picture. Rome wasn't built in a day, and neither was a solid crypto portfolio. At the end of the day, it's all about empowering yourself. Don't be a sheep following the herd off a cliff. Be the shepherd, charting your own course. Make informed decisions based on facts, not FOMO. And for crying out loud, never invest more than you can afford to lose. Your future self and your blood pressure will thank you. So there you have it, folks. The next time someone tries to sell you on the next big thing in crypto, take a step back. Ask yourself, is this really the game changer they claim it to be, or just another flash in the pan? Remember, In the world of crypto, the only constant is change and memes. Lots and lots of memes. Stay savvy, stay skeptical, and may your portfolios always be green. This is your friendly neighborhood crypto realist, signing off. Now, if you'll excuse me, I need to go check if my 2017 ICO tokens have mooned yet. Spoiler alert, they haven't.